time to get a fundamental conversation going on the markets. Devang Mehta from Spark Capital Private Wealth joins us now to discuss market fundamentals, individual sectors, something that he's betting on as well. Devang, good morning. Thank you so much for joining in. We have been talking about a lot of macro updates that have come by, be it the GST cuts. We have been talking about the festive demand pickup as well. In that scenario, if you can tell us and drill it down to individual stocks or sectors which tend to benefit the most, also considering the valuation picture.
Thanks, Sonal, for having me on the show. It's always a pleasure to be on CNBC-TV18. Good morning. Very importantly, I think what has changed the complexion of the market in the last 8-10 days, and as you rightly talked about, probably the festive season demand is what people are now factoring in with almost Navratri starting on 22nd September. And I think the effects of GST, the benefits of GST also start trickling from 22nd September onwards. Most importantly, what has sort of objectively happened for the market over the last 1 year is we faced a lot of headwinds in the last calendar year. But this calendar year, if you look at, except for Trump tariff tantrums, I think a lot of positives have emerged out, right from the GST benefits to India upgrade to a good monsoon to RBI being accommodative, RBI putting in liquidity, RBI doing rate cuts. I think most of these things have turned positive. I think we are somewhere near the I can say it's a beginning of the end of the downgrade cycle, which is very important as you put valuations also as a question. So my sense, yes, we might optically look a little expensive, but on a lower base effect, at least from the third quarter of this financial year, we might see earnings coming in as sort of better optimism, and probably also upgrades on the way. I think it's too soon to talk about upgrades, but I think a lot of pessimism has also been factored in. Now, with festive season demand coming in, probably this quarter also would not be that sort of momentum led. But October, November, December is a quarter where Dussehra as well as Diwali falls over there is clearly a festive demand quarter. My sense, a lot of these consumption-related names, probably more of discretionary and luxury consumption names, autos, hotels, all this would do well. With that, also a lot of capex-related themes, as well as a lot of your financials, credit growth-related themes should start doing well. So my sense that probably from here on, the risk-reward looks very attractive as global markets are turning expensive. I was also doing a comparison that Indian markets are just MSCI India is up by just 1%. And MSCI Asia ex-Japan is up by 21% for this calendar year. So I think there's a lot of money that could flow towards India. Yes, probably couldn't time it to perfection, but next 3-6 months, I think we can see a bit of FII flows also starting.
Devang, good morning. Thank you for joining in. We're counting down to yet another earnings season. You're just a couple of weeks away from that now. Do you expect the second quarter to be slightly better, if not more, as compared to the first one, especially considering the fact that there has been a lot of flood-related disruptions and so on and so forth during the quarter as well?
Yes, absolutely. Two things I think are monitorable over here. One is the numbers. Of course, the market follows numbers very closely. Market participants follow the numbers very closely. Two things happened. One, as you rightly talked about, flood and sometimes also the not so good effect of monsoon. Secondly, yes, we also know that there is going to be a deferred demand because the last 20-25 days since when the GST was announced, I think it took some time to probably culminate. My sense, yes, there can be a bit of deferred demand which could trickle into October, November, December as a quarter. But market knows this, right? Market is a discounting mechanism. So markets will start factoring in this not so great numbers a little early than what we think about. Most importantly, I think the commentaries of the management, because they would also see this last 8-10 days of September, the consumption companies, particularly companies related to banking demand, NBFCs, the consumer lending companies. I think even capex-related companies would probably see that their order books are now full and how the execution happens. So my sense, the commentary of the management, the body language will be more important in this quarter. The third quarter could actually turn the needle in terms of the positive results as such.
Devang, you spoke about capex and consumption being two themes which could work going forward. Our colleague Nimesh had done a piece on this. He spoke about how now money is moving from the capex themes to consumption. We took it forward on MF Corner as well. And we spoke about how, yes, this might be the theme that would happen going forward. So what is making you so positive on capex? Because that theme did work some time back. Will it still work? Or do you think that money will gradually start moving from capex to consumption overall?
think typically what I always say, and I think at the expense of being repetitive, I would say that three themes probably would do very well. Apart from that, there are a couple of more themes. But clearly, one, India has always seen in the last 25 years, if we just go back in history, Indian investors have always made money in one, consumption. Second, typically IT, post 93, 94, when the IT companies started to get listed. Banking, PSU banks from 2000 to 2010, and private banks and NBFCs from 2010 to 2020, sort of, and also pharma companies. These four themes typically made money for clients. I think 2003 to 8 was a cycle where a lot of capex-related companies came to the fore and did 5x, 8x, 10x type of returns. But I think I'm seeing a time that India probably has always been back office to the world. Can we become a very small factory to the world? I'm nowhere saying that we are talking about China plus one, but can we probably do a bit of capex related work, engineering, manufacturing, a bit of semiconductor, allied, power, renewables? I think this is a sector which has just opened up. Defense, railways. Yes, they did very well for the last 2-3 years. Can it slow down a bit for the next 3-6 months when consumption comes back to the fore? It can. But my sense that you have to ideally have a portfolio where consumption will lead to capex and capex will lead to credit growth. So I think these three themes, typically domestic oriented themes more so, where capex should also be one of a prominent theme. Consumption has come back to the fore, rural as well as urban. And third has to be credit growth related, sort of banks, sort of NBFCs, a bit of financial intermediaries. This can be the construct of the portfolio.
You know, Devang, as you mentioned about capex and consumption, the other bit that has been a big talking point so far has also been the pharma space, right? You know, a lot of consensus among the analysts is the fact that based on the uncertainty, you should shift your focus towards the domestic-oriented pharma companies. But then this overhang of the US FDA continues to remain as well. Where does your preference lie? Does this, now with tariffs for now at least being exempted, do you prefer the US exposed pharma companies, the larger pharma names, the Sun Pharmas or the likes, or would you like to go with the smaller pharma names, or maybe even choose hospitals or diagnostic players?
Yeah, I think beautifully put. I think very clearly we are in the camp that says that larger pharma companies, come what may, they have sort of created wealth for investors. They might continue to do so, but with the headwinds around the sector, I think there are a lot of niche opportunities, as you rightly said. India right now is a beneficiary of a lot of new sectors listing. The last 5, 6, 7, 10 years have seen hospitals, diagnostic laboratories. Yes, we are positive on certain hospitals, not all. We are positive on a couple of diagnostic labs as well. We also like pharma companies which sort of right now don't have US exposure. There are a couple of pharma innovators. There are 1 or 2 MNC pharma companies also which are part of the portfolio. But traditional companies into generics and sort of always having the IR from US FDA are not in the universe as such immediately. Yes, we might look at them at certain valuations, but as I said, more so niche pharma companies and sectors which are allied to pharma, like hospitals or diagnostics, are something that we are looking at.
All right. Okay. Thank you so much, Devang, for all your thoughts and the outlook on the markets and individual sectors as well. With that, we'll do one thing. We'll slip into a short break. Up next, we'll focus on the crypto market with Nick Bhatia from the Bitcoin Layer with Manisha Gupta on the other side.